Good morning, members. It is the appointed time and the quorum has been formed. I call to order today's meeting of the panel on financial affairs. This is the first meeting after the Chinese New Year. I wish you all good luck and prosperity and health in the Year of the Snake. Item 1. Information papers issued since the meeting on the 2nd of December last year. Now, the government has replied to the proposal to implement the global minimum tax as well as the other tax regime. Item 2, items for discussion as the next meeting. The regular meeting for March is scheduled on Friday, 14th of March this year at 10:45 a.m. The government has proposed 2 items for the regular meeting in March. They are 1. Budget of the MPFA for the financial year of 2025-6 and latest developments of the eMPF platform. And 2. Budgets of the Insurance Authority for the financial year of 2025-6. Do members agree these 2 items for discussion in March? It is decided. Item 3, briefing on the work of Hong Kong Monetary Authority, HKMA. We will now invite the representatives from the HKMA to come in. Good morning. For this item, we welcome Mr. Eddie Yu, Chief Executive of the HKMA, Mr. Arthur Yun, Deputy Chief Executive of the HKMA, Mr. Howard Lee, as well as Mr. Darrell Chan, Deputy Chief Executives. Prior to today's meeting, the HKMA has prepared a document for members' reference. A very warm welcome to the HKMA. When you are ready, I invite Mr. Eddie Yu, the Chief Executive, and his team to walk us through the paper. Chief Executive, please. Thank you, Chairman. This is my first time here in LegCo in the Year of the Snake. I wish all members good health and good luck, as well as smooth work in the Year of the Snake. Now, I hope that the external situation, as well as the situation in Hong Kong, will remain prosperous. Now, first of all, I will talk about the macroeconomic situations, and then I will defer to my team to talk about our work in other areas. First of all, global economy. In the U.S., now from the graph, you can see that last year, the U.S. economy still saw significant growth of about 2.8%. Now, the blue line represents the inflation trend. It remains within the 2% target. Inflationary forecast in the graph in the middle, you can see that most of the members of the Fed forecast a slow increase in inflation because of tariffs as well as anti-immigration policies and other policies may drive up inflation. Now, after the rate cut in December, as shown in the rightmost graph, the forecast rate cut in 2025 is 50 base points, somewhat lower than the expected 1% rate cut forecast last year. Now, last week, the Fed announced that the rate cut pace would slow. The policy rate direction would remain the same. It seems that the Fed would like to observe the impact of the new administration's policies on inflation before announcing further rate cuts. Now, with the uncertainty and volatility in rates and trade, now the Trade Policy Uncertainty Index is shown on the left graph. Now, after the election, the index has risen significantly. Now, with these uncertainties, as well as the US dollars gaining strength towards the end of last year because of the changes in inflationary expectation, US fund began to flow out of the Asian Pacific region over the past 2 to 3 months. Because of the strengthening of US dollars, various currencies in the Asia Pacific region have depreciated. It may mean that more capital may flow out of the region. We have to be aware of the risk. On the mainland, because of the series of boosting measures, the economy has improved. Now, economic growth for the last quarter was 5.4%, and the overall growth for the year is 5%. Now, as represented by the red line, residential floor space sold has seen 4% increase in November and December last year, the first time in 3 years since 2023. This is a good trend. In the graph in the middle, as shown by the gray curve, nominal retail sales has increased by 3.5% last year. That is a result of the series of boosting measures. However, the curve above, that is the savings rate of mainland households, it remains high at 32%. It means that there is still room to further boost consumption in the mainland. Since the Central Economic Work Committee and the Political Work Committee in December last year, various policy directions were announced. It seems that the central government will adhere to the combination of packages, including a more loose monetary and currency packages. Now, the effects of these measures will be shown in figures gradually. Now, these will help boost confidence in the Hong Kong economy. Now, if you look at the graph on the left, retail sales volume and volume of restaurant receipts. Now, because of the change in consumption pattern of local population and mainland tourists, we are seeing some pressure. Now, in the graph in the middle, mainland visitors numbers. Now, since the single permits multiple entry measure was announced, we have seen more visitors from the mainland. Last year, we have received 45 million mainland visitors, up 30% compared with last year. However, that is just a fraction of the 2019 figure. That is 80% of the total number of visitors in 2019. So we hope that there will be more policies to support the tourism industry to attract more visitors to Hong Kong. And also, with further enhancements to our airline capacity, visitors numbers to Hong Kong will further increase. It seems that we are on a good start during the Chinese New Year. Now, last year, in the last quarter, because of the series of package, we have seen a great boost to the capital market. In terms of the equity market average daily turnover, as shown by the blue curve, and the fund raised by IPOs since Q4 last year, there was a significant increase. The trend should remain throughout this year. In terms of Hong Kong dollar's position, exchange rate remained stable towards the end of last year because of the annual accounting effect. Hong Kong dollar appreciated. From the start of the year, Hong Kong dollar has depreciated back to 7.79. Because of the external volatilities. There are doubts whether the link exchange rate is suitable for Hong Kong anymore. However, according to professional analysis and also economists, they share the consensus that the link exchange rate is the most appropriate system for Hong Kong dollars. Now, according to the IMF, they also think that the link exchange rate system is the one that suits Hong Kong most. Now, from our perspective, we have published an article to the effect that Hong Kong is a small and open economy. Our major pillars are trade and financial services. So exchange rate stability is of utmost importance. To encourage international issuers and international investors to use Hong Kong as a hub for their capital, monetary stability and currency stability is their priority. So there is no need to change the link exchange rate system. In terms of interest rates, our interest rate is close to the US dollar level. Of course, there are short-term volatilities. It depends on the changes in the short-term demand for Hong Kong dollars. So towards the end of last year, interest rates for Hong Kong dollars has risen. After that, it has climbed down. And also the deposits and loan interest rate, it is decided by banks based on their capital reserve ratio and so on. So HIBOR has reduced by 0.56% towards the end of last year. That's the prime rate. It has eased the pressure on those who have a mortgage as well as for businesses. However, the pace and magnitude of rate decrease is uncertain. The US Fed will decide further rate cuts based on the inflationary pressure. In terms of bank deposits, throughout 2024, total deposits has increased by 7.1%, while Hong Kong dollar deposits has increased by 2.8%. So there is not a scenario of capital outflow, as mentioned several years ago. Now, in terms of housing, because of the rate cuts in both the US and Hong Kong, and also the series of boosting measures offered by the central government, which has boosted confidence. In Q4 last year, according to the RVD, housing prices in Hong Kong has risen mildly by 0.4%. Throughout last year, however, housing prices have dropped by 7.1%. As of January this year, it has fluctuated in a narrow margin, according to property agencies. Transactions have improved. In Q4, there was an improvement in sentiment. Property developers have launched new projects. In Q4, total sales amounted to 15,019 aids, up from 13,000 in Q4. There were 53,000 transactions in 2024, up 23% compared with last year. In January, because of the holidays, transaction has slowed down. We have to keep monitoring the market. Now, in terms of the external environment, the trade war has just fired its first salvo, and there are new tariff measures implemented by the U.S. administration. How will these affect the global financial markets is yet to be seen. Now, I think the series of boosting measures in the mainland will continue. We hope that these measures will continue to boost internal or domestic consumption and offer some offsetting effects to the external uncertainties.
On the interest rate, there will be great uncertainty ahead. I think interest rates will go down, but the extent and pace of such changes will depend on where inflation goes. With all these external changes, for us and our work, Maintaining financial stability matters above all. There are buffers in our financial system. We have great resilience. In our forex reserves, we have more than $4 trillion to support the linked exchange rate system. We have to stay alert. We have to keep watching the market. We need good contingency plans for different scenarios. And now I invite my colleagues to tell us more about their respective areas of work. Thank you. Now I will briefly go over banking supervision. As Mr. Yu just said, in 2024, bank loans shrank by 2.8% in terms of the total volume. Let's look at the composition. The fall mostly came from loans from the outside, down 5.7%. The overall picture is similar to that the years before. Hong Kong's interest rate was on the high side, so that explains the low demand for loans. That's understandable. For businesses, they could find loans elsewhere in, say, the mainland. The lending costs were lower in the mainland. That's why some businesses opted for loans in the mainland rather than in Hong Kong. And there were also offshore RMB loans in Hong Kong. Our RMB loans last year rose by 60%. We started from a low base level. So that's the picture of the market last year. Now I know top of mind for people is credit quality. Over the past 2 to 3 years, the classified loan ratio edged up. By the end of Q3 last year, it was at 1.99%. The figure for the end of 2024 has yet to come out. I have looked at the preliminary figures, but that level was roughly the same as Q3 last year. We have to make a judgment on the risk. Is there pressure for the ratio to rise further? We have to think about that. There is pressure for the classified loan ratio to go up. That has to do with the interest rate on the high side. And then in the mainland, the real estate market, some issues remain. For Hong Kong, some local real estate developers are struggling with liquidity. So that's where some of the pressure will come from. And that explains the pressure for the CLR to go up. But we think the risk is manageable because there is no concentration of the classified loan ratio risks. Bank provision levels are high. Even when you leave out the collateral, the coverage is 65%. When you factor in the collateral market value, the coverage is at 130%. I know top of mind is also financing for small and medium enterprises. Last year, we launched many measures. In March last year, we launched 9 measures for banks to keep supporting the operation of SMEs. Over the past 9 months, 31,000 SMEs benefited from the 9 measures involving $73 billion of credit. In October last year, we launched further measures to help SMEs with upgrading and transformation. Special loans, for example, for loans for banks to extend to SMEs for upgrading and transformation. We talked to the Hong Kong Association of Banks about measures to help SMEs with transformation, green transformation, digital transformation. We want to help SMEs expand their market so that SMEs look at not just the Hong Kong market, but also the GBA market as a whole, or even the ASEAN market. Because those are places that SMEs may want to explore. We want banks to support SMEs in such efforts. Another matter top of mind for people is scams. Police figures show in the first 11 months last year, scam figures in Hong Kong exceeded 40,000 cases. 2023 as a whole was lower than the figure for the first 11 months for last year. That's why we committed vast resources to this area. We focused on publicity. We want to bring the situation with scams under control. Our work covers several areas. First, it's about banks, cybersecurity and detection, and also sharing of information and intelligence between banks. We briefed this panel earlier on a measure, and that has to do with personal bank accounts. When banks spotted something suspicious, banks could share information with other banks more swiftly, but that would involve legislative amendment. We are taking forward the legislative effort full steam ahead. The second point has to do with how banks talk to their customers, including reminding their customers, and we're expanding the scope of reminders. We also want banks to provide more options to customers. Now, for certain online banking options, customers may not use those functions often, so customers may be better off turning off those functions. Our third point is to raise the awareness of customers, and that involves education. Quite a number of cases of scams involved customers authorizing those transactions. Customers thought they were in transaction with a bona fide party. With customer authorization, there's only that much banks can do because the customers are authorizing those transactions. That's why education matters. We have to teach customers the do's and don'ts. As we have been saying, things go wrong when people click on a link. So we are trying to get the message across in our publicity. We're asking people not to click on links. But when you ask people not to click on a link, it's hard because habits are hard to change. So we will continue with the publicity and education. We also go to universities with the effort. At the orientation camps last year, the police got involved in the education effort. We're talking to the police about further education campaigns. Now, some legislative changes, we will move ahead with changes to subsidiary legislation, and that has to do with some prudential measures from the Basel Committee, such as the weighting of certain assets, and we will be implementing the requirements of Basel. And that will require changes to our subsidiary legislation. In the first half of this year, we will be tabling such amendments in LegCo. Now, in our longer version of the slides, we cover the changes to the banking rules. Now we're talking about a wide range of subsidiary legislation. We are moving full steam ahead with the consultation and also drafting the amendment to the primary legislation. Once the drafts are ready, we will table the bill in LegCo. Now I give the floor to Daryl. Chairman. I now comment on our financial market. Now, within last year, our offshore RMB business recorded growth, especially in loans. The growth was sizable. Previously, at this panel, members wanted to find out more about the offshore RMB business, so I will discuss that today. In this area, we have efforts on 4 fronts. The first 3 have to do with ourselves. The final one has to do with promotion. So there are a few things we work on. 1, liquidity. We want to ensure we have an offshore RMB market of sufficient size, and also the liquidity pool. We want to keep enhancing the operational efficiency so that the liquidity pool can do what it's supposed to. Second, product. It's about creating scope for more RMB related product. So the focus here is mutual market access options to explore more product. We bring those products on stream for the market. 3, infrastructure. That includes enhancing our central securities depository. and also promoting the cross-boundary use of CBDCs. And that includes the Enbridge project and also wider use of the ECNY. Apart from these basics, we also want to promote market usage of product. That's why we have also stepped up overseas promotion of offshore RMB. We have been working with other central banks about cooperation in terms of policy. We also have been telling people overseas about Hong Kong's offshore RMB business. On the 13th of January this year, the governor of the PBOC, Mr. Pan Gongsheng, and the chief executive of the HKMA announced several measures on the same day about ways to deepen financial cooperation between Hong Kong and the mainland. And these are some major policy breakthroughs. One, enhancing offshore RMB liquidity to support the real economy. So this echoes the point I just made about liquidity. We will be introducing an RMB trade financing liquidity facility. And this is about banks extending liquidity to their customers for financing. The limit now is 100 billion yuan for terms of up to 6 months. By the end of February, we will be able to put in place this measure. And we will be announcing the details at that point. The other measures have to do with Bond Connect, and this is about product. First, it's about the southbound Bond Connect. There are several enhancements. One, extending the settlement time an extra 30 minutes per day. That's to make it easier for investors to find RMB for settlement. Two, infrastructure. We're bringing in other currencies for settlement. This is to enhance efficiency. The next step is to bring in more institutional investors for the southbound trading, such as securities and insurers, market players. The other two measures are about holders of securities for the northbound trading. We want these investors to be able to make greater use of the securities. So it's more than just about holding the securities. Instead, we want investors to be able to use the securities as collateral in offshore RMB business or for repo. This means they hold on to the securities, but they can use the securities for collateral to access funding by other means. The other measures have to do with greater ease for corporates and individuals. So the goal is to link up Hong Kong's faster payment system with the mainland's internet banking payment system. This is to facilitate small amount cross-boundary payments in the future. The final measure has to do with account opening by attestation, and we are gradually increasing the number of banks. Now, 8 Hong Kong banks already offer such attestation services. Many Hong Kong residents wonder what they can do with cross-boundary payments. They have many scenarios in mind. So based on these scenarios, we're working with our mainland colleagues. We have compiled frequently asked questions. Those FAQs are now online. When people have questions about cross-boundary remittances, they have a good source of information to refer to. The financial infrastructure aside, I want to turn to the bond market. Now, we have put in place tender arrangements for RMB government bonds. This also supports the internationalization of RMB because this is government bonds denominated in RMB. This will be a standing practice where we help the government issue bonds in RMB. There were 2 successful batches of government tokenized green bonds. Building on this success, we want private market players to make greater use of tokenization So we have two schemes. One is about digital bonds. The other one has to do with this area. We want players to make greater use of the technology. Green finance, we will hold the Hong Kong Green Week in September this year. That's also building on the success from last year. We want to keep that up. Now, the stablecoins bill, that bill is going through the bills committee stage. We want to see that bill go through the stage, and then we can make that law soon.
Howard. Thank you, Chairman. I will brief members on several topics. First, on financial infrastructure. I will be brief because you are the experts. Financial infrastructure is stable. There are no major crises, and everything is running smoothly. Fast payment system, FPS, that we all know. We have strengthened the functions. We have been linking it up with the Thailand Central Bank, and also, as mentioned by Daryl, we're going to link it up with the IBPS in the mainland. Now, the growth in registration has increased by 16%, while transaction volume has increased by some 30% last year. This is a very famous platform. Now, Central Money Market Unit, or CMU, it has reached a milestone. On the 1st of January, the CMU OmniClear Limited was set up. The new company is a wholly owned subsidiary under the HAMA for managing the system. This will help us more effectively commercialize and internationalize the CMU. On commercial data interchange, or CDI, we have been improving the system and providing more user-friendly services to facilitate loan application. We have facilitated some 40,000 loans last year with a loan scale of some $30 billion. We will continue to work on the CDI's improvement. Now, I will skip this page, FinTech and Central Bank Digital Currency. The CBDC is launching projects on retail and wholesale levels. Next, investment performance of the exchange fund. There are several major asset categories. For bonds, for major economies in the West and Europe, bond yield is still high. It is good because it gives us more gain on bond interest. However, with the changes in interest rates, in many economies, interest rates have gone up. It means that bond yields have dropped. It has offset our gains partially. In terms of equity, there's great fluctuation in the mainland and Hong Kong markets, but the overall trend is an upward one. It brought us significant gain. On the other hand, as mentioned by Eddie, the US dollar has strengthened against major currencies. In the middle of last year, most major currencies have depreciated against the USD. More significant ones are Japanese yen, 10% drop, and euros, 6% drop. On the contrary, the RMB remains stable, just a drop of 2% against the USD. This is because of the depreciation of our assets in non-US dollar, in non-Hong Kong dollar assets, it has brought us some loss. Now, over the year, bonds and equities have brought us admirable gain. However, because of the negative currency translation effect, we have recorded a $35.6 billion loss. For the full year last year, the investment income was $219 billion. Compared with that in 2023, it was a bit underwhelming. However, gains on other investments in Q4 on private equity and so on have not been recorded yet. With those recorded, we may be able to get even with the investment income in 2023. That will be reflected in the final year report. Now, this is the income and expenditure balance sheet. Fees payments to the Hong Kong SAR government funds and statutory bodies, that was $13.2 billion, excluding future fund. That is fee payments to the fiscal reserves. Now, in the long run, overall speaking, we have achieved our objectives to conserve the capital and gain value. The return is 2%, and the historical return is 4.5%. Last but not least, mortgage insurance program under the Hong Kong Mortgage Corporation Limited. As mentioned by Mr. Eddie Yu, the housing market in Hong Kong had seen some volatility. In the past few months, number of applications for mortgage loans remain stable. In August, we have offered some facilitation measures for eligible homeowners who have self-occupied properties. We have a special measure to help them meet their special needs arising from changes in personal or family circumstances. So far, 800 cases have been approved. Another scheme close to members' heart is the SME Financing Guarantee Scheme, 80%, 90%, and 100% guarantee products. We have seen the most applications in the 100% guarantee products. The deadline has expired. But over the years, the scheme has helped a lot of SMEs and their employees. Now, about the delinquency ratio for the 100% loan guarantee schemes. Last time, according to our report, it was 10%. Now, the delinquency ratio, the delinquency rate has risen to 13.5%. There is an upward trend, but we are managing the scheme prudently. When there are deliberate defaults of repayment, we will hold the applicants to account. Dedicated loan guarantee schemes, they are running smoothly. I will not go into details of them. I will pause here. Thank you, HKMA, for your report. Now, these are the members who have pressed the button. I will give each of you 4 minutes, including questions and answers. Those who have indicated their wish include Mr. Ronnie Chan, Tan Yue Hen, Rock Chen, Jeffrey Lam, Johnny Ng, Ms. Carmen Kan, Mr. Robert Lee, Dr. Wendy Hung, Dr. Starry Lee, Mr. Chen Kin Po, and Louis Leung. Mr. Ronnie Chan, please. Thank you, Chair. The first question is on scam. Some organizations, including some members here, have been suggesting that for scams on social media platform, or whenever there are scams, social media platforms and regulators and banks should share the responsibility according to their roles. I wonder what the HKMA stance is on this. Second, because of scams, the HKMA has launched a new scheme that is Money Smart and Money Safe. Some banks are already prepared for this, but some banks need more time. Now, in many interviews I have given, I've been saying that I hope this scheme can be launched sooner in more banks to help the public. Now, yesterday, the financial secretary said that because of the trade war and the tariff war, the war on tariff, interest rates in the U.S. may remain high. Now, bond yield performs poorly, as well as the equity market, when interest rate is high. If interest rates remain high and long, what will be your strategies? Mr. Eddie Yu, I will take the first question. Now, in this year, investment strategy is difficult to make. Just this morning, the stock market has performed in a very volatile manner. Interest rates may remain high. There will still be rate cuts, but not as rapid as expected. But there is an upside on this. Bond yield will remain stable because that is an interest gain from interest. Whether it is the war on tariff or the U.S. domestic economic situation, if the interest rate remains high, it may affect the value of our assets. So we will be prudent. Liquidity is of utmost concern. Second, we will adopt a defensive stance. For example, putting more assets in short-term contracts or keeping more cash. The most effective strategy is to diversify our portfolio. Arthur? Thank you. First, on the different roles and responsibilities to be shared by different parties. As mentioned by Mr. Ronnie Chan, different parties have to share their responsibilities in a scam. There are two types of scam. One is unauthorized transactions. Now, the apportioning of blame is clearer. Since it is unauthorized, where does the leak occur? Why wasn't the customer alerted of the unauthorized transactions? So there are clear guidelines on dealing with this. As we have said in last September, when I was attending the annual ceremony of the Association of Banks, the other type of scams, that is authorized transactions, the apportioning of blame is very difficult. Still, we need to apportion the responsibilities fairly among banks and other parties. When banks fail to take precautions and customers fail to implement safeguards, we can easily find the party to be blamed. But the apportioning of responsibilities, however, is more difficult. We will issue a set of comprehensive guidelines soon. We have started discussing this with the trade since last year. We will be able to provide a guideline this year. MoneySave is a system to allow the customers to lock part of his deposits so that it cannot be transferred out of the account online. We target a specific group of customers under the scheme. For example, the elderly people. In the first quarter of this year, some banks will be able to launch the MoneySave scheme for them. However, it involves a change in the system. It's not just a simple lock. It also involves unlocking the account. So it is quite complicated. We hope that banks will be able to complete the relevant work within 9 months. But it would be best if banks can launch the scheme to some targeted customer groups in the first 2 quarters. Next, Dr. Tan Yuehan. Thank you, Chairman. A very good Chinese New Year to everyone. 2 questions. First, the exchange fund's relationship with our capital markets. There were some studies investigating the relationships between the exchange fund and the stock markets or the capital markets. Now, recently, some ministries in the mainland have issued a guideline on medium to long-term capital. So, which assets managed by the HAMA are classified as medium to long-term assets, and what is their relations relationship with the Hong Kong capital market. Now, the central government mentioned that the government will suitably increase the portfolio in the country's exchange fund. So the central government may increase investments in Hong Kong's exchange fund. Have you conducted any study on this?
My second question about these slides is the third year of decline in Hong Kong bank loans. It's 2.8% last year. I know interest rates were high and that led to weaker demand, and that led to 3 years of decline in demand for loans in a row. And banks were reluctant to lend. But Hong Kong has been bringing in capital and businesses. At the same time, bank loans shrank. There is inconsistency. So what can the government do to turn around this decline in bank loans? And we're talking about loans shrinking years in a row. Mr. Eddie Yu, I will take one question and then Arthur can discuss the other points. Now, for the exchange fund, the focus is investing in foreign exchange. So we're investing in other currencies. As with other managers of Forex, we invest in some Hong Kong stocks. Those stocks were bought in 1998 in unusual circumstances. That's for long-term holding. Apart from that, we steer clear of the Hong Kong dollar market. As we said before, when you need liquidity most, you want to sell your Forex holdings for US dollars to bolster Hong Kong dollars. But if you buy Hong Kong dollar denominated assets and in times of volatility you sell your HKD holdings for liquidity, you are making things worse. That's why for all managers of Forex, they don't buy assets in their local currencies. As Dr. Tan said, the People's Bank of China wants to invest in Hong Kong assets. We welcome that. We can also invest in the mainland's market, and then we have been doing that. As we have been saying, we want to diversify our investment portfolio, and that includes the mainland's market. The mainland can also invest in Hong Kong's assets. That feeds into our Forex holdings. We also encourage the involvement of medium to long-term capital in the market, such as pension funds and insurers. They can play a greater role in the capital market for long-term investments. We support that. On loans, as I said in my opening remarks, we have seen years of shrinking of bank loans. For 3 years in a row, loans shrank in volume. We don't think that's a supply-side problem. Bank data show capital adequacy rate 120%, liquidity coverage ratio 160, 170%. We don't think that's holding banks back, so it's not a supply-side issue. We think instead it's a demand-side problem. For demand, there's only that much a regulator can do. Last year, we launched a measure. Around mid-2024, we lowered the countercyclical capital buffer by 0.5 percentage point, and that meant more scope for banks to lend. We don't think banks have any supply-side issues with lending. Still, we lowered the countercyclical buffer rate to make it easier for banks to lend. But if members have certain ideas about stimulating loans, members are welcome to let us know, and we will be talking to the sector about that. Mr. Rock Chen. In 2024, the exchange fund made $219 billion. $13.2 billion was paid to the HKSAR government. In 2023 and 2024, the government saw a deficit of almost $200 billion. My question is, in special circumstances, can we get the financial secretary to move some of the money from the exchange fund to our fiscal reserves in unusual circumstances to ease the deficit? I get it. The exchange fund is there to shore up the HK dollar. Our exchange fund reserves stand at 5 times of our currency in circulation, or 39% of our M3. So my question is, at which point will we think we're comfortable we are with the level, and then we can move some money from the exchange fund to the fiscal reserves? Howard made a good point. The 100% SFGFs is top of mind. For some people, I know the HKMA is closely watching whether people are defaulting. Can the HKMA tell us what measures there are to reduce cases of bad debt? 3 questions. I will take the first question. Arthur will take the second question. Now, on splitting the fees with the government, that arrangement was put in place in 2007. We look at the average returns over the past 6 years, and then we pay a fee to the fiscal reserves. That arrangement is tried and tested. That arrangement was put in place for its predictability and consistency. In 2022, the exchange fund saw a loss because of the market volatilities. The loss was more than $200 billion. Still, we paid more than $50 billion to the fiscal reserves and the statutory bodies, and that provided reliability for our fiscal reserves. That's the thinking behind this fee arrangement. Mr. Rockchan wondered if we can make any one-off arrangement. This is possible under Section 8 of the Exchange Fund Ordinance. So the Financial Secretary can first consult the Chief Executive in Council, and then the FS can move some of the exchange fund's reserves into the fiscal reserves. But the ordinance also has a requirement that such an appropriation has to be one where the FS thinks the move will not affect Hong Kong's ability to support its currency. And this warrants careful consideration. As we said, the external environment is rapidly changing. Things can change rapidly for our financial market. If we make this move, we have to consider the possible implications for the resilience of our currency and financial market. And then there's also the problem of optics. The market thinks we make a one-off appropriation, and then they wonder if more appropriations will follow. Once a transfer triggers a problem with confidence, and then capital moves, and you cannot reverse this once the genie is out of the bottle. So we have to be cautious. Now over to Howard about the other question. Now there were 3 cases. Of course, each case is unique. There was a case where the borrower defaulted, so we talked to the bank. After the negotiations, the bank arrived at a deal, a loan restructuring deal with the borrower. So that loan was paid afterwards. And in another case, the borrower defaulted. We chased after the guarantor, but the guarantor passed away. We did not give up. We kept chasing up the borrower, and we went to the probate registry. So money came out of the estate of the guarantor, and the government recovered the money. In the third case, there was some malicious default. We chased up the borrower. We applied for the bankruptcy of this borrower, some losses were taken, but what mattered was to send out this message: people have to repay what they borrow when it's government money, and we will chase them up. Mr. Jeffrey Lam. First, I thank Mr. Eddie Yu for clarifying things given the rumor outside about changing the linked exchange rate system. When rumor comes around, timely clarification matters. I asked the HKMA to talk to banks more often to support businesses. Afterwards, communications improved massively, especially after the task group was set up. Many businesses found the task force helpful. We know deposits are growing. So Hong Kong is not short of cash. Hong Kong people are not short of cash. People are reluctant to spend money because of economic uncertainty. So how do we encourage people to spend? It's not just about spending money on dining, because that's just money spent and nothing comes out of it. How do we improve the economy? How do we bring in more investors? How do we allow investors to generate returns? That's the important question. Some businesses are still struggling. In the first half of this year, I think those businesses will keep struggling. Some people may wonder, with your politics, what do you do? I won't put that question to you. The measures you may discuss may have to do with national security or financial stability. We shouldn't show everyone our cards, and then people will go after us. Now, my question is, there was an announcement, and banks responded. It had to do with the construction industry. There would be some measures for the construction industry. Only 6 banks signed up and took part. Other banks took no action. Out of the 6 banks, there is just the BOC. Other banks did not issue such a declaration. There were syndicate loans. Those loans involve many banks, not just the 6 banks I mentioned. When one bank pulls out, the syndicated loans fall apart. Medium-sized construction firms and real estate developers face the same problem. It's not just about the construction or real estate sector. Other industries have such needs. They also need syndicate loans too. So will the HKMA call on banks to cover more industries? Can we also cover import and export? Can we also support those industries? Mr. Eddie Yu. Arthur can take this question. In fact, the member anticipated our measure. Mr. Lam highlighted a key point. It's not just about the construction industry. 6 banks issued their statement. We welcome that. We will keep in touch with other banks. Those 6 banks issued the joint statement because they mostly faced the construction industry. When they take the lead, they set an example. We will continue to coordinate the work. And I also agree with the member about the fact that this is not just about the construction industry. We set up a task force. One priority for SMEs is upgrading and transformation. For certain industries, we will also remain in touch with the trade associations to find out their needs, and then we can see where banks can give support. So the member can rest assured. If the member has particular ideas in mind, he's welcome to let us know, and we will talk to the Association of Banks about that.
Next, Mr. Johnny Ng. Thank you, Chairman. I have 3 questions. Following up on the question of 100% guarantee products for SMEs, now, according to the Chief Executive, the delinquency rate has reached 13.5%, equivalent to 20 billion Hong Kong dollars. Will this tremendous sum of money affect the situation of our deficit? When will the loss be credited or recorded in the balance sheet? And also, we need to think of ways to prevent abuse. Now you are using time to trade for more room for maneuvering, allowing the SMEs to repay it. But are there any other strategies? Now about the housing market, last year, the number of cases of negative equity has decreased to 38,000, just 0. However, the ratio has risen to 0.15%. Now, some economists expected the situation to improve with the lowering of interest rates. However, with the slowdown pace of rate cuts, there are more uncertainties. So will that affect the economic situation in Hong Kong? Final question on bank. Now we are actively inviting foreign capital to invest in Hong Kong. However, according to many investors, it is extremely difficult to create a bank account in Hong Kong. They will receive a letter from the bank and asking for the investors to withdraw their money or transfer the money away from the account within 2 months' time with no explanation given. I know this is because of the AML-CDF requirements, but can the banking system operate in a more transparent manner to prevent uncertainties to the investors? Howard, thank you. About the SME loan guarantee products, now the laws will be recognized in the current accounts of the government's fiscal reserve. Now they would be recognized into the current account. Now in terms of preventing laws suffered from bad debt, there are 2 steps. Before the approval of debt, credit assessments would be conducted to ensure the repayment capability of the applicants. Now, the 100% loan product is a special product. Members said that banks shouldn't be too stringent on approving the scheme because of the pandemic. So at the time, the delinquency ratio was high at 20%. Of course, that is unfortunate, but that's a fault of the design. Second, how do we chase up the defaulting creditors? Now, the only thing we can do is to approach the guarantor. Now, about the negative equity ratio in the housing market is risen to 0.15%, but the number itself is low. Now, whether the high interest rates would worsen the situation, you may still remember that the residential mortgage market in Hong Kong is unique. Now, there is a prime cap, even though it was based on the HIBOR. Now, actually, most cases fall within the prime cap. So in the previous upswing of the interest rate market, the impact has not been absorbed by the market entirely. So the creditors still have some maneuvering room. So I would not be too worried. Among the cases of negative equity, most of them are insured by mortgage insurance scheme. Now, there are conditions to be met first to be eligible for the insurance scheme. So, to some extent, that has mitigated the risk. In terms of the difficulty in creation of bank accounts, we have talked to the industries, but it seems that they have difficulties giving us real examples. So like I always said, we welcome any referral of cases. We have a dedicated team to help customers to create accounts. Closure of bank accounts is another thing. If investors or account holders are asked to close their accounts, they must be given a good reason. Even though it is for AML/CTF reasons, a legit reason must be given. So again, if there are any cases, please refer them to us. Next, Ms. Carmen Khan. Thank you, Chairman. I have 4 questions. First, on the developments of offshore RMB business. Now, the Asian Financial Forum was held on the 13th of January. Mr. Pan Gongsheng, the head of the PBOC, together with the HKMA, has announced 6 measures, as shown on slide 21. Now, I would like to know the timetable for these 6 measures. They are very important, especially in terms of settlements of RMB. In 2024, there was $15 trillion, up 30% compared with last year. Now, even then, if there are insufficient choices of RMB products, investors may simply exchange the RMB into USD. So we need to pick up speed on implementing the measures. About the exchange fund, members have asked a lot of questions on this. We are developing a gold market in Hong Kong. According to analysis, the market is optimistic about the gold prices in the long run. So how about enhancing the portfolio of gold in our reserve? The country has issued bonds denominated in USD overseas. Maybe we can invest in them because they are related to the developments of the country. Third, about scam. The HKMA and the government is going to introduce an amendment to the banking ordinance, but I hope you can act more rapidly. It is not in the 2025 legislative program. Now, I've studied the cases in Australia and Singapore. The requirements are different. Now, in Hong Kong, we need to enable exchange of information between banks. That is the Tier 1 strategies, as mentioned by the HKMA. It will help share the responsibility. In Singapore, they define those transactions as seemingly authorized transactions, but not something of either end. Fourth, about financial infrastructure. The legislative amendments or the legislative exercise for protection of the critical computer system for critical infrastructure is ongoing. I'm the chairman of the Bills Committee. So can the HKMA also designate that as your priority? Chief Executive, I will take the question about exchange fund. Now, investment or investment gain from exchange fund, we adopt a diversified portfolio in both commodities and precious metal as well. But I can't tell you the exact amount of holding we have in these portfolios. We look at several factors. First, return, but liquidity is also important. Diversified gain is also important. So we decide on our portfolio based on these considerations. We have also some holdings in mainland access. Bonds and securities, these can be denominated in both RMB or USD. This is part of our diversified investment strategies. I will defer the next question to Daryl. Ms. Khan mentioned the 6 measures. They are being implemented as we speak. For example, RMB liquidity. We will announce the details soon and implement the measures in February, we are communicating closely with the banking sector. For the Securities Connect, some measures have been implemented on the 14th of January concerning the arrangements concerning collaterals. The measure will be implemented on the 10th of February about over-the-counter transactions. The measure will be implemented in the first quarter this year. Concerning other financial measures for retail investors, some have been implemented already. Some need more time for us to adjust the infrastructure. But I can tell you for sure that we will implement these measures very soon. Now, about linking the infrastructure, that will happen in the middle of the year. I thank Ms. Carmen Khan for mentioning our legislative exercise. We are working full steam with the law drafting division of the DOJ to come up with a draft to consult the market. We don't have a slot reserved in the legislative program in the first half of the year because the drafting process is still ongoing. We will compress the timetable further. We understand this is an urgent matter. Now, as we said last time in our report, under the Privacy Personal Data Ordinance, or the PDPO, there is an exemption. We have to obtain an exemption from the Commissioner for Privacy. So we hope that even before the legislative amendments comes to be, we can allow exchange of information partially between banks. So next time we'll report on the details of our work. Next, Mr. Robert Lee. Thank you, Chairman. Mr. Michael Lee. Now, according to the report, it seems that we are heavily dependent upon the U.S. and the mainland's financial and monetary policies. As I often said, our exchange rates and our interest rates, we are packed with the U.S. dollars. Now, with such high interest rates in the U.S., it imposes a great pressure on our SMEs. This year, the situation will still be volatile. The USD is gaining strength, and the interest rates will remain high. The room for rate cuts has narrowed. So how big an impact would that be on the SMEs and our exporting business? I would really like to know how are you going to help them. Now, about cross-boundary businesses. In order to go global without relying on the US and the European markets, we need to rely on other markets, for example, the ASEAN and Middle Eastern markets. However, according to some SMEs, their banks are not very friendly or welcoming towards our SMEs. So will the HKMA work together with the PBOC and the mainland authorities to export our products, including innovative products in the GBA, to go global to markets, including the African market? Now, about your investment position. Like Mr. Carmen Khan said, our policy address mentioned that we will become an international gold trading center. So what is the HKMA's strategies on this? How can we improve our precious metal market? Now, the new administration has come into office in the US. The president has launched his own cryptocurrency. So in terms of cryptocurrency, are you prepared to invest in it? Have you already made strategies for that? Since you have such a sizable exchange reserve, if we can launch our own stablecoin or cryptocurrency, I believe many overseas investors would be interested. So this is an inevitable trend that is cryptocurrency. We need to be prepared for it.
Chief Executive of the HKMA. Question 1, SMEs, as Arthur said, we will do what we can. That includes more scope for banks to lend to SMEs. We also have the task force. When SMEs need accommodation with loans, the task force can deal with that. This year, we are working with the HKAB, Association of Banks. They have a task force on helping SMEs with upgrading and transformation. That's more than just loans to tide them over, but that's to make SMEs more competitive globally. That will be a priority. We're also working with the HKAB about cross-boundary commerce. We want to facilitate cross-boundary commerce and for SMEs to play a greater role in this process, such that SMEs can play a role not just in cross-boundary commerce between Hong Kong and the mainland, but also Hong Kong and other countries overseas. We're trying things out not just with payment, but also data sharing. Building links matters for banks and business. So we're teaming up with the HKAB when we visit Southeast Asia and the Middle East. We want to build business links so that we can support cross-boundary commerce. We will be doubling down on that this year. On the third point, we have no plan to invest in virtual assets in our foreign currency portfolio. We have to consider liquidity, consistency, and long-term return. Without liquidity and stability, we cannot invest in that asset. Proper regulation, transparent, proportionate regulation matters. We're trying things out with tokenization to drive digitalization of our financial system that works better. Chairman, one comment. Please be brief. You have overrun. I agree with what he said. I am just saying the HKMA should be more proactive. So can we have our own system for virtual assets since there is so much uncertainty overseas? Dr. Wendy Hong, I thank the HKMA for briefing us. I have some questions. I agree that the linked exchange rate system is in Hong Kong's interest. We shouldn't change that. But then, given the tension between China and the U.S., Hong Kong is caught in the middle. The U.S. is trying to hold down inflation there, and they have a strong U.S. dollar. In the mainland, they're trying to deal with deflation. The trade war looks set to continue. What's the HKMA's take on this? Borrowing costs are high in Hong Kong. Consumption is flowing elsewhere. Many industries are under pressure, and that will affect Hong Kong's economic performance. Is this going to be the case? Now, there are mainland students coming to Hong Kong, and they fell victim to scams, and that involved huge amounts. On guarding against telecoms-based scams for mainland students in Hong Kong, what are some measures from the HKMA in terms of collaboration with the police, in terms of publicity and raising awareness? Specifically, will banks with branches on university campuses to set a cap on each transaction per day or per month for non-local students? If students want to raise the cap, they should be asked to go to a branch. Can we do that to lower the risk of mainland students in Hong Kong falling prey to scams? My next question has to do with construction firms and real estate developers. With your project, construction firms struggle with liquidity. Long-standing construction firms folded last year. The Northern Metropolis is coming. That means bright prospect for construction firms. Short-term volatilities and short-term liquidity problems should not lead to wage arrears or firms going into winding up processes. I know the HKMA cares deeply about financing troubles with construction firms. 6 banks will take the lead in helping those businesses with liquidity. Are there plans to expand such pilot schemes? Can we get more banks involved so that we can help the construction industry ride out these tough times together? I will take the first question, and then Arthur can take the other questions. On the strong US dollar, the Hong Kong dollar follows the US dollar, and that means the Hong Kong dollar will remain strong against other currencies, and this, to a certain extent, affects consumption and tourism. Our economy is resilient. When the Hong Kong dollar is strong, there are price adjustments. Our economy is resilient. We can support the linked exchange rate system. There are benefits to a strong Hong Kong dollar. Imports become cheaper. The inflationary pressure becomes lower in Hong Kong. But then for our stock market with many global investors, and they trade based on the US dollar, if a currency sees massive depreciation, those investors may want to think twice, and we won't be able to remain a global financial center. So that's something to bear in mind. On guarding against scams, some cases were discussed about university students. Let's treat this matter in perspective. There are many scams. The police have done much, so has the HKMA, but scams continue. It doesn't matter whether the student is from the mainland. We focus on publicity, on changes to systems, and whether that can help bank customers better protect themselves. We're offering more options in different areas. Dr. Hong wondered if we can set a lower daily transfer or transaction cap on the amount. Each bank customer can set their own transaction limit for their bank account. On whether we should step up this arrangement for certain groups, we can think about that. We do have certain measures like that in mind, but not specifically for mainland students. The member can rest assured that we are continuing with the work. On real estate developers and construction firms, 6 banks issued a joint statement. That's because those 6 banks are the banks that property developers and construction firms mostly turn to. But that's not to say we're doing nothing. The chain of funding is complex. Each case is unique. Overall, we want to give support. Banks have told us they support the real economy. Next member, Dr. Starry Lee. I welcome the HKMA. And I hope that the exchange fund can contribute more to our fiscal reserves with the exchange fund. The budget is coming up. Our economy is top of mind for many people, and people are talking about raising revenue and cutting spending. If we can make more money under the exchange fund, that should help our fiscal reserves. Media attention is usually about the income, and from this report, I have got a sense of the revenue. So, have we looked at how our exchange fund is doing compared with other sovereign funds? We're just in the sense of how we're doing and where we stand. Now, on negative equity cases, another member asked about this. Last September, it was at 1.99%. close to the 2% long-term average. The HKMA's view on this situation, so what is it? There's still pressure on commercial real estate property. Will there be spillover to other sectors? Now, the task force on SME financing has dealt with 400 or so cases, mostly about banks talking to SMEs, and that came out from a media interview between the chief executive and the media. Now, some cases were dealt with, others required further investigation, and then some cases had to do with differences between banks and SMEs. What do we do about them? What happened afterwards with these cases? The last question has to do with Hong Kong's development into a talent hub. Newly arrived talent wants to buy or rent property here, but because of the capital control they're subject to, they are struggling. I'm going to move a motion at the 2 sessions this year where, with regulation in place, we let mainland talent bring money to Hong Kong to buy or rent property here. So, as a matter of financial safety, security for Hong Kong and the mainland, what's the HKMA's take? Chief Executive, I'll take the first and fourth questions. On how we're doing compared with other sovereign funds, it's hard to generalize because the portfolio allocation and risk appetite are different from one fund to the next. Other sovereign funds invest in riskier assets or equities. Last year, up to Q3 last year, we don't have the full year figure yet. In Alaska, they have a pension fund 8%. In New Zealand, 14%. Those are return rates, but it's hard to generalize. In Norway, it's 13%. But let's bear in mind, they invest in riskier assets. For us, our investment is 7.1%, overall 5.3%. When the market does poorly, say back in 2022, our loss was 5%. Those pension funds I just named lost more than 15% or up to 20%. We don't want that kind of volatility for our exchange fund. That's why I say it's hard to compare our exchange fund with other sovereign funds. Overall, we see less volatility for our exchange fund. Now, on mainland talent bringing their money to Hong Kong, I support that. I talked to the People's Bank of China when I visited Beijing earlier. On the mainland, they will have to consider limits, how they enforce the limits. We will be keeping an eye on this. Dr. Lee mentioned the 1.99% bad debt ratio. It's hard to predict where the bad debt ratio will go. Interest rates remain high after all. The external economy is fraught with uncertainty. So for the classified loan ratio, there is pressure for this ratio to go up further. For us as a regulator, we want to keep the risk manageable. And we think the risk is manageable. That's because banks remain strong, highly profitable. We don't see concentration risks. The provision coverage is enough. We think the risk is manageable as a result. Now, the task force about the cases handled. Now, the figures get complex. 450 cases. What do we mean by that? Those cases went to banks. The task force was chaired by the HKMA and the HKAB. For 70 or 80 cases, those cases went to banks. 370 cases went to us. 10% of or 20% of those cases that went to us were inquiries. No request for follow-up. Those were just questions. As for the other 80%, 65% of the 80% of cases involved implementation issues. For these 65% of cases, 80% of such 65% of cases were dealt with, and we're working on the remaining 20%. And those are complex cases we're handling. As for the remaining 10%, it's about expectation gaps. Those customers are in a tough situation. And banks are hard-pressed to grant further extensions. Even with the intervention of the task force, it will be hard to offer a solution.
Next, Mr. Chen Kin-po. Thank you, Chairman. Referring to the paper, bank loans has dropped by 3% for 3 consecutive years since 2022. Now, the capital adequacy ratio is much higher than the international standard. Bank liquidity ratio is 178%. It means that there is a lot of cash and liquidity in the banks. However, there are rumors that banks are calling loans in the market. I thank the HKMA for clarifying the issue, that you would do your best to help. I know that banks should be more prudent in face with uncertainties. They should have say over the decision to grant loans, because they will have to suffer the loss in case of bad debt. So maybe you can advise banks to take the initiatives to streamline their business and be more open to business. Now, on the other hand, there are a lot of scams globally. 1 billion USD is lost to scammers. The FPS is so convenient. Even if you set limits on daily transfer, it can come into effect the very next day. Now, the limit is $400,000. That's the cap. That may mean the entire savings of many people. If you press the wrong button, the entire sum can be transferred to scammers. I appreciate the Money Save scheme. It will make it more difficult for scammers to operate. Now, with the Money Save option, it may mean more difficulty in transferring out amounts from the account. But what if the account holder is kidnapped? If the scammers have your phone, they can operate and change the option at will. Scams are very complicated now. Hackers can hack into your phone without your knowing. So it really puts bank customers on edge. So I hope banks can launch the Money Save program for the vulnerable customers, but they should extend it to other customers as soon as possible. Thank you. Actually, I've talked to Mr. Chen Kin-po previously. Some suggestions you made were brilliant. Now, in terms of extending the protection to more customers, we are doing our best. In terms of the lock, you can lock it online, but to unlock it, you need to approach the physical branch yourselves. The idea is bank staff will ask the account holder for the reasons of unlocking the bank account. This will give the customers some time to consider their choice and also allows bank staff to verify the application. This will allow some face-to-face time between the bank staff and the customers as an additional layer of protection. Now, there are some rumors about loan calling. I hope it will not affect the confidence of the market. We are not going to do this carelessly. We have a dedicated team to help troubled customers. Mr. Louis Lung, thank you. 2 questions. First, on bank loans. For 3 consecutive years, as shown in slide 14, there is negative growth. Arthur said the main problem is with the demand side, but not the supply side. However, from cases that I have come into contact with among real estate developers, banks adopt a very, very prudent attitude. So does the HKMA have any communication with the Hong Kong Association of Banks? Since we are developing the Northern Metropolis at great strides, we are adopting the large-scale land disposal approach. If the banks are still so prudent about granting loans with a long maturity, that would be a problem. The usual 5 to 7 years of tenure will not suffice for developments in the Northern Metropolis. So I hope the Association of Banks can relax the approval. Now about exchange fund, slide 37. It seems that the exchange fund is performing marvelously. If my personal fund manager can perform this well, I would be very happy. Now, in the past 30 years, there were only 3 years where there was negative growth. So the accumulated amount in the exchange fund is astronomical. I know the exchange fund's objective is to protect the Hong Kong dollar against any speculating activities. However, the fiscal deficit is huge. From my own view and a macro point of view, the money in the exchange fund is still our public money. It's just that the usage of the exchange fund is subject to Article 107. We need to achieve fiscal balance and eliminate fiscal deficit. But that is self-limiting. So can the HKMA talk to the financial secretary to set an appropriate safety level for the exchange fund? Once that level is reached, the additional investment return can be recorded in the government's account. Mr. Eddie Yu, now whether there is a suitable level of exchange fund, that is a difficult question. It is very difficult to foresee external shocks down the road in terms of the financial market and also the geopolitical stage. These shocks do not go directly into our financial market, but through unauthorized intermediaries like hedge funds. They adopt leverage to attack our market. And that would mean that the size of a potential crisis would be of a magnitude much larger than the previous two. So it is very difficult to say how much exchange fund we need to protect Hong Kong dollars. Amidst the volatility, safety is our utmost concern. In terms of fiscal deficits, in 2 weeks' time, the financial secretary will talk about how he's going to achieve fiscal balance in the long run. But we can't neglect the impact of a fiscal deficit on the financial system. For example, after years of pandemic, many economies have a fiscal deficit, and a lot of economies are trying to get back to black. Without fiscal discipline, just look at the UK. The 10-year bond yield has rocketed. Several years ago, the Prime Minister of the UK resigned because of the exact same reason. France, the United States, the governments are all looking at how they can achieve long-term balance to keep the long-term bond yield down. There is a price to pay with the fiscal deficit. We need to balance the balance sheet. On loan, I defer to my colleague. I'll briefly address the question on bank loans. There were calls for banks to extend the tenor of their loans. Now, for infrastructure projects, the tenor would usually be long. Now, through our working group, we will work on these issues. Now, the working group's agenda is not just on loans for SMEs. Various issues involving various industries are also discussed by that platform. So rest assured, Mr. Louis Leung, let's not take it's not just something as simple as black and white. Banks tend to follow the established practice in terms of tenor length. They adhere to the old practice, but we may be able to achieve some breakthrough with that working group. Sorry, Mr. Louis Leung, time's up. Please be brief. Thank you. I'm not supporting a deficit budget. I just want us to be confident. Let's not scare ourselves. We still have a lot of money in the pocket. On the other hand, I am aware that the decision of granting loans is made upon established practice, but banks should be more innovative because of the changing circumstances. I have to draw a line here because we are overrunning. Please keep your time within 4 minutes. Dr. So Chang-Wing. Thank you, Chairman. Just one question. On 13th of December last year, the director of PBOC, Mr. Pan Gongsheng, said that the government, the PBOC, will greatly enhance its holdings in Hong Kong assets from the country's exchange fund. It will bring about more development for our international financial markets. We all know that we need more and more liquidity in the markets to make it more vibrant. The country has some 3 trillion USD in its exchange reserve. It is a big sum of money. So the announcement has been made for quite some time already. So from what you know, what does it mean by putting a significant amount of the country's exchange fund in Hong Kong dollar assets? What is the extent we are talking about? And in which areas will the PBOC invest in? When will that happen? Concerning this strategy, what is your stance on this? Mr. Pang mentioned in that forum that as a next step, the PBOC and the country will focus on supporting the development of Hong Kong's capital markets. He specifically mentioned that he would work closely with the financial regulators in Hong Kong for that purpose. Mr. Eddie Yu. Thank you, Dr. So. As you've mentioned, the director mentioned that the holdings in Hong Kong's assets would be significantly increased. That means more investment in our equity and bond markets. About the extent, well, this is very sensitive information. So I can't give you a specific answer, but our position is we fully support it. If more of the PBOC's exchange reserve is invested in our market, that would definitely improve our liquidity and the sentiment. We are cooperating fully with the PBOC. On the 13th of January, 6 measures were announced jointly between the HKMA and the PBOC. The measures were decided during my visit to Beijing last year. These measures are critical to developing Hong Kong into an offshore RMB hub and also connectivity between the two markets.
Next, Mr. Duncan Chiu. Thank you. Let's talk about EHKD. Daryl touched on that. We are progressing with this effort. Now it will become Digital HKD Plus, and no project ensemble is going on. It's also interfacing with digital and non-digital assets. So EHKD has been in the works for years. Infrastructure testing, we've been making this journey led by the HKMA. Do we have any larger scale tests in mind? Shenzhen handed out money through ECNY, and then at the Hangzhou Asian Games, the ECNY was put in use. Once you have people using the currency, things fall into place. So do we have such tests in mind to drive the EHKD forward? We can also use ECNY here. You simply set up an e-wallet, you open a bank account, you link things up. The national games will be held this year. We can use that as a scenario to test out the electronic currency. Now, the FPS is convenient, and there are plans to link up our FPS with the mainland's IBPS. That will be helpful. We set up prompt pay some time ago. We should be able to test things out. We now know the tech is working reliably. Can we also have these agreements with other places popular with Hong Kong tourists or with markets where tourists come to Hong Kong often? Greater ease of use means more people will use it. Do we have a timetable for that? Thank you. On EHKD, some EHKD has been in issuance. EHKD is already in use on mBridge in the form of digital currencies. For digital bonds, EHKD has also been issued for use. Mr. Duncan Chiu mentioned the retail usage of EHKD, where people can use EHKD with their e-wallets. We have been running tests and we have been looking into this. We've been watching the experiments in different places in the mainland and in Europe. In Europe, they are talking about a digital euro, but conditions vary from one place to another. For Hong Kong, we have to think about this. Public acceptance is one factor. Will the EHKD address certain payment problems with conventional currencies? We have to weigh these factors carefully. If we ask people to take that extra step, we have to address the question, what is it that people cannot do with the current payment arrangement? We don't see a compelling reason on this front yet, so more work is needed. Now on ECNY, we will be working with the PBOC on promoting this. Now on linking up FPS with other systems, we have the arrangement in place with Thailand Central Bank. We are also planning to link up our FPS with the mainland. Internationally, there are multi-point linkage arrangements. We're thinking about taking part in such arrangements so that we can link up with more systems in different places. Now, I want to sum up the discussion we have had today and some comments raised. And I also have some questions. members focused on a few points. One, a balance between bank services and regulation. Members mentioned account opening. I have referred some cases myself to the HKMA. I've seen some improvements recently. My suggestion is, where feasible, greater transparency in account closure will matter, especially when businesses are coming here. The economies of Hong Kong and the mainland are seeing steady growth, but let's not underestimate the struggle for certain businesses, especially SMEs. On investment, members suggested diversifying our investments. That means not just traditional bonds and equities, but also gold. This is top of mind for members. There was also a discussion about the linked exchange rate system. This system is crucial to our financial stability, and it's a tried and tested system. Dr. Tan Yueheng and Dr. So Chun-wing both mentioned remarks of Mr. Pan Gongsheng about using our country's money to invest in Hong Kong's assets. I know you may not be able to tell us too many specifics at this point. Our country is trying to strengthen its financial sector. On January the 13th, 6 measures were announced. Can the HKMA tell us more about how it is working with the PBOC? What are we doing? Can the HKMA tell us more what we're doing for the capital market and financial market? Now, on fixed income products and bonds, the bond industry would like to see bonds being available as a retail product. Our country also stresses financial inclusion. Of course, we want institutional investors, but we also want the retail side. It would be good if small and medium-sized financial institutions can also issue bonds. So can I get a response from the chief executives of the HKMA on these points? First, on working with the mainland and our discussion with the mainland, that has been going on. Every now and then, we meet with the PBOC on the working level and also on a personal level with the officials from the PBOC. If some ideas can be put into practice, we put together the measures like what we've seen in January. Now, as for our next step, repo, for example, is possible with offshore repo, but cross-boundary repo also matters. A global investor may wonder whether they can take part in onshore repo so that they take their bonds as collateral and then use their money in Hong Kong. That will bring huge benefits to our offshore RMB business. On cross-boundary Wealth Connect, the scope of products and limits and also the applicability of such products is also a point that we have been discussing with the mainland. Hopefully, we can launch measures every now and then after our discussion with the mainland. Now, on deepening the bond market and making the bond market more inclusive on the retail side, our bond market has been growing quickly, especially with regard to RMB bonds and green bonds. For retail bonds, public institutions have issued such bonds. We are working with the SFC. We have a working group. We're focusing on the bits and pieces, what we can do to further enhance the vibrancy of our bond market. We're working on that, and we're hoping to make announcements soon. Thank you for the sharing. So that's it for this item. We now come to the fourth item, and this is about the SFC budget of the Securities and Futures Commission for the financial year of 2025 to 26. We now invite government officials and the SFC's officials to join us. Joining us for this item are Dr. Calvin Wong, Chairman of the Securities and Futures Commission, Ms. Julia Leung, CEO of the SFC, Mr. Paul Young, Commission Secretary, Mr. Andrew Wen, Chief Financial Officer. From the Financial Services and the Treasury Bureau, we have Mr. Francis Ho, Deputy Secretary. Whenever you are ready, first of all, we welcome the FSTB and the SFC for joining us. Whenever you're ready, can we first invite Dr. Calvin Wong to briefly go over the paper. Good morning, members. I'm delighted to be here. It's my first time to brief members here in my capacity as the chairman of the SFC. I'm here to brief members on the SFC's budget for 2025 to 26. Now, on the Chinese almanac, today marks the beginning of the spring, and I wish good health to all members. To strengthen Hong Kong's advantage and edge as a financial center, the SFC made certain announcements for certain measures. This year, we will build on our success, and we will focus on 4 fronts. 1, strengthening the resilience of the financial market. 2, strengthening market competitiveness. 3, driving industry innovation and ESG. And 4, strengthening the manpower of the SFC and its resilience. The budget today has to do with the 4th focus, and that's the SFC's resilience. And that also serves as the foundation for our other 3 efforts. And we have been working on enhancing efficiency, streamlining procedures, improving coordination between divisions. We have been driving digitalization. We have been making good use of money and manpower, reducing waste, and also reducing our carbon footprint. In terms of our finances, we stick to prudence as our principle. Given the challenges to Hong Kong's financial market, we have been raising revenue, reducing costs, and boosting efficiency. To make Hong Kong's market more competitiveness, we've been staying attuned to market changes and geopolitical challenges and opportunities. We have committed vast resources to many measures, and that includes mutual access measures with the mainland, visiting the Middle East and Belt and Road countries to strengthen ties, and ramping up publicity to alert people to online scams. Our effort has paid off, so we will continue to commit resources to our efforts. Transaction levies are the main source of our income. In the current financial year, given the daily transaction volume of $130 billion in our equity market per year, and that's about the $99 billion projected. And because our operating expenditure is lower than expected, so our budgeted deficit will go down from $774 million to $148 million. Now, based on these levels, assuming daily equity transaction $135 billion, our projected income will be $2.5 billion. Total expenditure $2.9 billion. So this means our projected deficit will be $240 million, and that includes one non-cash expenditure, and that has to do with acquiring office space, and that covers depreciation $88 million. If daily transaction levels go above our projection at $145 billion, we will be able to balance the books. Apart from transaction levies, over the past 13 years, we have waived licensing fees. Altogether, we have foregone 2.7 billion Hong Kong dollars. As with other public services and professional licensees, we stick to the user pays principle. The SFC decides that for 2025 to 26, we will resume the collection of the licensing fees, and that will bring in $256 million in revenue. Now, renewal timing varies from one license to others, so that means only part of that money will be recognized next year. Now, the operating situation is improving for market players, so it's appropriate time for us to resume collecting the licensing fee. Manpower costs make up the largest part of our outgoing. We have frozen our headcount for 3 over the past 5 years, and that includes 2024 to 25. In the year to come, we will need to hire experienced people with the right skills. This is to meet market needs and also deal with the opportunities and challenges from geopolitics to make Hong Kong more competitive. We have reviewed our manpower plan for 2025 to 26. We will deploy our internal manpower to meet the needs. Still, we will need 15 new positions, and that's roughly 1.5% of the current headcount. Most of those positions have to do with putting in place strategic I&T projects, including the use of artificial intelligence and also more manpower for licensing and ongoing surveillance related to virtual assets. We will commit resources to continue these efforts to foster market development, and that includes working with the mainland and building ties with the Belt and Road countries, and also guarding against abuse, guarding against scams online. On pay adjustment, we have looked at trends and inflation in the financial market. In 2025 to 26, we have set aside 2.1% for pay adjustment and also performance linked, and there's a 1.5% extra money for the change. But we also have to factor in the estimation of our independent consultants based on the pay. So the board will have to make a decision on that. In November 2023, the SFC acquired a floor of office space on Island East, and that's saving us $140 million per year. Leaving out bank interest payments, our cash payment has improved by $44 million. We have bought this 9-floor office space, and then other floor space will be delivered by 2028. One floor will be delivered in 2026. In the next 3 years, each year, we will put $125 million into building provision. This is to complete the transactions, and we will be paying the loans from banks. By the 31st of March 2026, our reserves will stand at $7.2 billion. Altogether, we will have $5 billion for property acquisition. Our revenue mainly comes from transaction levies. Equity, or rather stock transaction, is the function of many factors, market sentiment, and external environment. In the days to come, we will work closely with the HKEX and other stakeholders to foster market development. We will keep looking at the market condition and keep an eye on our financial position. If needed, we will propose appropriate measures to raise revenue and cut costs. Ms. Julia Leung and I welcome questions from members.
Thank you, Dr. Wong. Time is tight. I will give each member 3 minutes. So please keep the time strictly. Dr. Tan Yueheng, Mr. Tang Fei, Dr. Wendy Hung, Mr. Ronald Chan, Ms. Carmen Kan, Mr. Rock Chen, Duncan Chiu, Dr. So Chan Wing, Deputy Chairman, Mr. Edmund Wong, Chen Kin Po, and Dr. Sari Lee. Dr. Tan Yueheng, thank you, Chairman. A very happy New Year to you all. I have 3 questions about the SFC. First, estimates of income. The expectation was $1.7 billion. Now it is $4.7 billion. It is a 32% difference. At the time, we calculated this upon a daily turnover volume of $90 billion. Now it is $130 billion daily transaction. Now in 2025, the great discrepancy in terms of estimates and the reality occurred again. Now, for the first time, for the past 20 years, the levy level only goes down but not up. So with this difficult economic situation, can you not increase the levy? Second, you have a large reserve of $8 billion as well as, $6.2 billion. So how do you manage this amount of reserve? How can you ensure that it is managed efficiently? What is the investment return from the reserve? 3, in terms of expenditure, the major expenditure item is staff cost. But you also mentioned that you are spending more on developing AI. It's not huge, just $19 or $16 million. By using AI, you can supplement or even replace manual labor in some work process. So have you conducted any study on using AI to save some staff cost? Chairman, thank you, Dr. Tan. I will take the easy question. The levy rate is 0.0027%. That is, for every $1 million of transaction, we charge $27. We have taken a comprehensive consideration of the market factors, as well as the need to promote trade and transactions. We don't intend to adjust the levy upward. That is also clear in the report. But we must understand that levy is our major source of income, and transaction volume in the market is uncertain. So we would like to maintain the levy rate unchanged. In terms of how we are using and managing our reserve and how are we employing AI, I will invite the Chief Executive Officer, Ms. Julia Leung, to brief members. Mr. Andrew Wan may supplement on how we are managing the reserve. Ms. Leung, please be very succinct. Thank you, Chairman. On expenditure on AI, we attached importance to the use of AI. In the past year, we have launched a sandbox to streamline internal procedures, including translation and other areas. We expect to adopt AI on a much larger scale in the future. The results are ideal. Security is ensured and efficiency has been enhanced. Mr. Andrew Wan, thank you, Chairman. Please be succinct. It's already 4.5 minutes. On AI, the CEO has addressed the question. Now on reserve, we have $6.2 billion in reserve. Part of it was used to purchase our office. And we have set up a reserve committee to supervise the investment strategies of the reserve. We have engaged a professional investment manager to invest our reserve according to the investment guidelines. The work has been outsourced to third parties, professional investment managers. We have adopted a prudent investment strategies. The investment return rate is around 4%. Amidst the high interest rate environment, it seems underwhelming. But we have a lot of buy and hold assets, which are, in essence, long-term assets. So the fixed deposits is 0.1% for those assets. 4% is very good for these long-term assets. Next, Mr. Tang Fei. Thank you, Chairman. So the SFC has given us a very clear report. Paragraph 14, manpower position. 15 new headcounts will be added this year. 8 will be on investigation and regulatory exercises. It means that half of the 15 new headcounts will be deployed to regulate virtual assets. Now, developing virtual assets is a trend. The only thing we want is to make it happen sooner. Now, among the 1,000 establishments in your organization, how many employees are deployed to regulating virtual assets? So I don't believe the 8 new members will be fully responsible for monitoring virtual assets. My next question is also about virtual assets. Now the levy rate is 0.00227% of the transaction. This is a standardized levy rate, and it is very clear. Now, with virtual assets available for transaction in the future, it may give a great boost to the security market. So will transaction of virtual assets have a separate levy rate, or will you still adopt the across-the-board flat rate? Chief Executive Officer. Thank you. In terms of manpower deployment, they share the workload. Now there is a team of a dozen responsible for fintech or regtech. The majority of our manpower goes to policy setting. The virtual asset trading system is still being established. There are quite a number of regulations to be launched in relation to virtual assets transaction this year. And there is also the licensing regime. In terms of regulation for intermediaries and enforcement, our team of cyber security officers are responsible for ensuring the cybersecurity of intermediaries. At the same time, they will also vet the cybersecurity standards of applicants for licenses. So there is a team of 30 to 40 staff members. But most of them have dual roles or other duties. We have to move on because of time. Maybe members can ask more questions offline. Dr. Wendy Hung. Thank you, Chairman. Using this opportunity, I would like to ask a macro question. Now, Mr. Qi Bin, the Deputy Director of the HAMA of the Liaison Office, said earlier on that compared with the international standard, Hong Kong's financial markets, governance, corporate governance, and efficiency is not sufficient. He said that Hong Kong should align itself with the 4 major financial markets, and also we should launch a white paper for Hong Kong's capital market so that stakeholders from all sectors can participate in drafting this white paper, and also the views of international investors should be sought. Now, this is a very important direction concerning Deputy Director Qi Bin's suggestion. Does the SFC have any roadmap for improving market regulation and corporate governance? For example, will the SFC work together with the FSTB and other bureaus and departments to deepen capital market reform and conduct a comprehensive and in-depth consultation process? It will improve our ecosystem and enhance investors' confidence. Also, local sectors can harness the power of a financial system so that its progress can enter the real economy. Dr. Wong, thank you. I will address the question first, and I will defer the question to my Chief Executive Officer. Deputy Director Qi laid down some major directions. So these are the directions that the SFC has all along been working towards. In the past, the SFC has been working tirelessly to improve the liquidity and also the breadth and depth of the market. In the past year, in terms of the Connect schemes as well as mutual recognition of funds, the SFC has been communicating very well with the mainland regulators. As a result, our market has been revitalized. So the question is how we can further grow the pie of the local capital market. As the regulator, this is our overarching mission. So that fully aligns with what Mr. Qi said. Now, the quality of listed companies are also very important. So in terms of corporate governance, by enhancing corporate governance, we can enhance investors' confidence in Hong Kong stocks.
Ms. Julia Leung, when we last briefed this panel, many members suggested expanding the capital market and scaling up our RMB business. That's our priority this year. More RMB product, more bonds. We have a task force with the HKMA. We work together on the issuance of RMB bonds and bonds denominated in other currencies, as well as transactions of these bonds. Then there's the work on virtual assets. On different fronts, we will be promoting our capital market. We will also work with the stock exchange to enhance liquidity and lower transaction costs. Next, Mr. Ronak Chen. Thank you. The budget from the SFC makes sense. You leave out depreciation, the SFC actually made a tiny profit. Previously, the deficit was tens of millions of dollars. I think the figures make sense. I think we also have the details here. On manpower, I do have some questions. 17 posts will be upgraded, and that's 1.7% of the overall headcount. Makes sense. But there's $9.19 million for provisions. That means it's $45,000 in pay rise per month. I think that applies to very senior positions. So for these 17 positions, are all these positions senior positions? There are 2-year fixed contract. In the year to come, there will be an extra 26 such posts, extra $8.58 million. And you'll pay roughly $330,000 per post. Are these junior positions? For this 2-year contract, you are setting aside $49 million. Assuming each person receives $330,000, you have roughly 150 such contract positions. So do you have that many contract work officers? What do they do? Our CFO, Mr. Andrew Wen, will take the question. Now, the contract staff, we have special projects. They may not be IT projects. Those projects may have to do with special research or new initiatives from our operations people. So we have to find specialists from the industry to work on those projects. That's why we have 2-year contract to recruit these specialists to cover those projects. Some people come, others leave upon the expiry of the 2-year contract term. So those people don't become part of our permanent staff. We want to leverage these people's special skill sets for project, but these workers are not part of the long-term staff payroll. The member mentioned figures. Now, we have factored in possible pay rise. We are making allowances. We're not saying that people are getting that sort of pay rise on average. So that figure simply means we're factoring in the pay adjustments and the financial impact of contract staff coming and leaving. Now, we also have a new headcount request. We will be looking for more senior people for the 15 new posts. We have already considered redeploying our existing staff. So some existing workers will be redeployed to new positions. And then after all these redeployments, we have decided to request new posts for the headcount. These posts will be more senior positions. But on when we can hire these people and the pay at which we hire these people, that will depend on the circumstances. There has been positive variance. That means savings in payroll. So that means we will not be spending all the money that you see here, Ms. Carmen Khan. The chairman mentioned if we can reach $145 billion in daily transaction, we can balance the books. Last December, we reached $142 billion per day. So in terms of the market access schemes, the measures from January 13th and the measures from last year, how can we shore up market confidence? Now, on extra posts for the headcount, some people question the idea of getting customs to be the regulator of OTC trading. So can the SFC take a more holistic approach? You go from licensing to custodian. Can the SFC tell us whether they will consider covering OTC trading? Now, we have waived license fees for many years. Now we are collecting the fees again. This is user pays. I support this. So how's the industry consultation coming along? Thank you. On shoring up market confidence, the CEO can take that question. A regulation of virtual assets. Mr. Francis Ho can give us a more holistic and more authoritative reply. The third question was licensing fee, industry consultation. The CEO will also take that question. So first, Ms. Julia Leung. We welcome the announcement from the central authorities. There were 5 measures about mutual market access benefiting Hong Kong. And then on September 24th, a number of fiscal incremental measures that restored the confidence of foreign investors. After September 24th last year, up to the end of the 4th quarter, daily transactions shot up 200, 300, even $600 billion. Now, this may be a one-off phenomenon. Some passive funds decided to increase their allocation of Hong Kong equities. Our overall strategy is more mutual market access will shore up investors' confidence. Now, on licensing fees, we follow the user pays principle. For the past 12 years, we only charged the fee at 50% for 1 year. For the other years, we waived the fee, and it's time that we collect the fee again. The impact on the industry is not something we are underestimating. We know there will be an impact on small and medium brokerages. The license fee is $4,700, not a huge sum, not a major part of operating costs. We have consulted the industry. We hope the industry will also find the resumption of charging this fee acceptable because the fee has not been increased for many years. FSTB. On the OTC, over-the-counter trading of virtual assets, we note the members' comment. At the subcommittee meeting last month, we discussed getting the customs to serve as the regulator of OTC trading, and we will be discussing the matter with the SFC. Our plan is to launch the second round consultation. We will compile the comments we received and then we will proceed. Dr. Starry Lee, can we switch on the microphone of Dr. Starry Lee? Sorry, I have a point of order. It's 12:30, almost 12:30. 6 members are still waiting to speak. We still have another item lining up. Can we leave the next item to the next meeting? It's not realistic to keep extending the time because, Chairman, you are the one managing the time, just so we know what to expect and plan accordingly. So let's try extension first. By the next item, maybe fewer members will speak. Chairman, this is not fair to members. Members expected the meeting to end around 1 p.m. And then people have other plans that they may not be able to put in their questions. I'm saying if this is not a pressing matter, maybe we can talk to the authorities. Can we leave the next item to the next meeting? Please consider this. We all follow the time on the electoral calendar. People don't ask a question simply because they don't get to ask the question. Thoughts from other members? If we have a thorough discussion of the current item, and then the next item may have to be left for the next meeting. So for members, other thoughts? Chairman, please strictly enforce the 3-minute rule. You cut them off as soon as you hit the time limit. So we will strictly enforce the 3-minute rule from now on. We'll see if we can carry on with the next item today and decide whether we leave that to the next meeting. Mr. Rock Chen.
Okay. Mr. Rock Chen, I will try to finish in 1.5 minutes. First of all, I support the budgets for 2025 of the SFC. I support adopting the users pay principle and resume licensing fees. However, I've noticed that there will be a 3.7% increase in income while a 7.2% increase in recurrent expenditure. I think this is a reasonable budget because excluding depreciation, the deficit is small. However, given the macro environment, everyone is trying to find ways to cut costs and spend wisely. Every department and governmental bodies need to keep the increase in expenditure in check. Ms. Julia Leung. In short, we will adopt machine learning, AI, and other information technologies to greatly enhance efficiency and cut costs on manpower. That is the major expenditure item. We have been trying that in the past 2 years. This year we will do it even more aggressively. Mr. Duncan Chiu. Now, the SFC will add 15 new headcounts in the coming year. Aids are related to regulation of virtual assets. I support it. I hope it will make your work more efficient. The other 7 new headcounts are in relation to INT and information system. As a representative of the sector, I support it. Now, there was a circular issued by the SFC that it will attach equal importance to development and regulation. Now, regulation, you are doing very well. But what about development? Direction 2 of your 4 directions is enhancing Hong Kong's international competitiveness as a capital market. So in terms of development, you should put more effort into developing Hong Kong's capital market and enhance investors' confidence. Now, as mentioned by Mr. Rokshan, $16 million will be spent on AI. Now, the Law Society conducted a survey about the application of AI in the legal setting. Now, with the $16 million spent, can you quantify the use and cost saved by AI and also the future roadmap? How much money can be saved by using AI? This is what we want to know. We want quantifiable indicators to show how AI can save cost. Dr. Wong, thank you. We have started using AI 2 years ago. On the enforcement front, we have been using AI to assist our investigative process as well as compilation of reports. It has greatly sped up the process. Ms. Julia Leung, anything to add? Now, using AI to vet legal documents and compile a summary, can that be a thing? Well, there are a lot of limitations and restrictions right now, but with the greater capacity of AIs like ChatGPT, we may be able to do that. It is difficult to quantify the cost saved by AI. By digitalizing some of our work processes, however, we have enhanced our efficiency. Dr. So Wing, thank you, Chairman. I support the SFC's budget. Appropriate regulation, an appropriate balance between regulation and development is important for Hong Kong's capital markets. Last year, revenue or income from stamp duty on stock transaction accounts for a small amount of the government's revenue. However, it still contributed some $40 billion to the budget. Now, if we can ramp up transaction in the capital market, it will also help. It is achievable. Last year, the minimum daily turnover was $100 billion, but $600 billion when transaction is busy. It sends it may send the wrong message to the market. Now, international investors can see your budget. Now, it seems that you are assuming that the daily turnover volume would be $135 billion per day. That's just the same as last year. Now, with your efforts and other favorable factors, sorry, Dr. So, please raise your questions in the interest of time. Please allow me to finish. I will ask my question soon. Now, Director Pan Gongsheng said the PBOC will increase its holding in Hong Kong assets. So by assuming the daily market turnover as the same level last year, I don't think you have taken into account the other favorable factors, including the enhanced investment in Hong Kong portfolio by the country's exchange fund. Dr. Wong, thank you. The assumption of daily turnover in the markets for year 2025 and 6 was made for the purpose of budgeting. The assumption was based on the average figure of the past 12 months. It is not a forecast of the daily turnover next year. We have been adopting this practice for many years in the past already. Mr. Edmund Wong, thank you. In the budget, there's the increase of $175 million in expenditure, an increase of 75% from the estimation. I agree that we need to invest more in AI. However, the SFC has encountered credibility issue in the past. So besides investments in AI and manpower, will the SFC increase training for those on the front line, which are maintaining the integrity of Hong Kong's reputation as a financial market? And also, how can you ensure that the newcomers have met the fit and proper tests? Dr. Wong, I will defer the question to Ms. Julia Leung. Thank you, Chen. Thank you, Mr. Wong. That is a very timely question. One of our staff members has been compromised, and we have been, since then, enhancing our management on sensitive data. We have stepped up training for our staff members concerning scenarios with conflicts of interest. We have established a new mechanism requiring staff members to declare conflicts of interest when they are assigned a certain case. In the past, we only require declaration when there is conflicts of interest. Now we require declaration on default. Mr. Chan Kim-Paul, I declare interest. I am a board member of the SFC, of the Hong Kong Exchange EX. Now, in 2024, the income was at $2,269.63 million, up $551.64 million. Of course, the SFC would want the stock markets to be more buoyant because that would mean more revenue for you and for the government as well. Every year, some $40 billion of tax revenue comes from stock transfer. So if we can have a $200 billion transaction per day, it would eliminate our fiscal deficit in essence. So the regulatory objective is to maintain the fairness, effectiveness, competitiveness, and transparency of the stock transaction of the stock market. So I hope you can focus more on competitiveness rather than just regulation. Now, recently, you have streamlined your application process and specified the responsibilities clearly. That's great. You should do this. You should do more from a top-down approach and streamline the mechanism. No replies needed. Next, Dr. Starry Lee. Chairman, I welcome the SFC's report on their work plan next year. All along, me included, we support the work of the SFC. This is a critical job because it will support Hong Kong's financial markets development. Pardon me for being picky. Under the general trend of saving cost, I think the SFC has the responsibility to create revenue stream and cut cost. I agree with what Mr. Chen Kim-po said. If only we can increase the transaction volume in the market, it will address a lot of issues. Now, as a public body, the SFC has the responsibility to cut costs. I think the upcoming budget will require a 1% cost saving in every department, or even more. This is the responsibilities of public bodies as well. I agree with your grounds for increasing expenditure, for example, stablecoin development and AI, but that is the challenge faced by every department. Every department is going to cut costs by 1 to 2%. So I think you have to do your part as well. If public bodies are allowed to increase their establishments and increase expenditure, that would be unfair to other departments. Dr. Wong. Thank you, Dr. Starry Lee, for your comments. From top to bottom, including the board members, the SFC embraces the principle of fiscal prudency. So both creation of revenue and cost cutting are important, but there is an extensive approach that is to cut costs. The other way is to improve efficiency. Now, under the leadership of the board, the SFC will conduct regular review on how we can cut costs better. Chairman, my answer has not been answered. I support the work of the SFC, but under the backdrop of cost cutting, public bodies should consider cutting costs as well, or at least not increase your expenditure. The reserve is being managed by the SFC, but it belongs to the Hong Kong public. Dr. Wong? As I've said, the board of the SFC has been controlling the increase in expenditure as well as monitoring the enforcement work of the SFC and the SFC's work on developing the market. A balance must be struck. That is the responsibility of the board as led by me. We adopt an open attitude towards any suggestions. So we hope that the SFC has heard Dr. Starry Lee's views and consider it seriously. Now, because of the time, I have to extend the meeting by 15 minutes. It is now my turn. I have some views. I have no questions, just to save time. In terms of optics, according to the paper, the SFC has the financial resources to purchase a 9-story office, and also another 3 floors will be purchased. Now, the stock industry as a whole is doing well. However, some SMEs are still struggling. Maybe the SFC can consider waiving 50 or even 70% of the licensing fees for the SMEs amidst the poor economic backdrop. In terms of manpower, members agree that you need more hands to regulate the virtual asset market. So 15 is not a lot. And also, 2 members will be added to the enforcement section, to the enforcement arm of the SFC, but that is already the second largest branch in the SFC. So in order to strike a balance between regulation and development, do you really need to employ more enforcement staff? As you have said, AI would be employed to enhance the efficiency of enforcement. So I hope you have heard my views. I don't need a reply because time is short. So licensing fees and manpower. Thank you. Once again, I thank the SFC and the FSTB for attending today's item. My apologies for the fast pace, but I think members have asked questions that they want to ask.
We'll come to item 5, the budget of the Accounting and Financial Reporting Council for the financial year of 2025 to 2026. We now invite the government officials and the AFRC to join us. Joining us for this item, we have Dr. David Sun, Chairman of the Accounting and Financial Reporting Council, Ms. Jenny Lai, Chief Executive Officer from the AFRC, and we also have Mr. Keith Jiang from the FSTB and also Mr. Eric Lee, also from the FSTB. Well, we normally allow the officials to give us the opening remarks, but in the interest of time, we want to allow maximum time for questions. So can we stay within 1 or 2 minutes for the opening remarks? Can we just keep it brief? Thank you, Chairman. I want to wish everyone a happy Year of the Snake. It's my first time here as the chairman of the AFRC. I want to discuss our work and our challenges. The budget has been submitted to LegCo. Our Chief Executive Officer, Ms. Jenny Lai, can tell us more about the details. Hong Kong's accounting profession has migrated from self-regulation to a new model of independent supervision. The bill has been passed. Our regulatory model is now aligned with global practice. Over the past 3 years, the AFRC has been promoting a robust and resilient accounting sector. We strike a balance between regulation and development. We stick to high standards of corporate governance and accounting standards and high levels of accountability. That's how we safeguard public interest. We also create favorable conditions for the growth of the accounting profession. This budget is for the financial year 2025 to 26. Estimated expenditure $379 million. Estimated revenue, including $174 million from the government funding. Income is estimated to be $379 million. We have been trying to enhance our efficiency. So our headcount will stay at 145, 100 workers are in charge of regulating listed companies, and as for the other 45 non-listed companies, we have frozen our headcount for 2 years in a row. As we keep expanding our regulatory scope, we're working with limited resources, and we have to cope with growing workload. That means we have to make good use of technology to boost our efficiency and streamline our procedures. Our CEO will tell us more in a moment. I'm sorry, Chairman. We're almost out of time. We overran for the past 2 items. So can you maybe incorporate your opening remarks into your replies to the questions that will come from members? Now, in the interest of time, let's do 3 minutes per member. Questions and answers inclusive. Dr. Wendy Hong, Dr. Starry Lee, Mr. Edmund Wong, and Ms. Carmen Khan. Over to Dr. Wendy Hong. Thank you. I will be brief. The paper says that AFRC has received $600 million from the government. Now, we have used $394 million, and we will use $174 million next year. And that means that government funding will dry up. The paper says by the second quarter of 2026 and 27, that money will be gone. If the stock market shows no major changes and no major improvement happens to our revenue, will the AFRC ask the government for more funding? Last year's panel briefing said, at last year's briefing, the AFRC, or rather the FSTB said it would ask the AFRC to prioritize its tasks, strictly control its costs, and achieve long-term sustainability. So over the past year, what sort of plans do we have for raising revenue and cutting costs to achieve fiscal sustainability? Government departments have to make that 1% cut. Will that affect the AFRC? Dr. Sun, the member made a good point. The AFRC is a relatively young body. We started regulating the accounting profession only in 2022. Over the past 2 years, we have been deploying our manpower to regulate listed entities which are at greater risk. So we have been deploying our manpower accordingly. We understand the strain on public finances. As I said, raising revenue and cutting costs. Raising revenue means working on 3 sources. 1, market transactions. 2, fees, levies from listed entities. And 3, levies from auditors for listed companies. From these 3 sources, we've only charged half the fee. So anything to add from the CEO? Please be brief. On cutting costs. Last year, we reviewed our costs. 1, legal and professional fees. 2, technology-related fees. On legal fees, we set aside a large amount of money. But given the complexity of our cases and our role as a regulator, we reviewed the legal fees. We set aside $32 million. This time, we project $16 million for I&T. We have a change of plan. So we will be upgrading our systems to boost efficiency. We're also committing more money to cybersecurity. So we have achieved some savings in IT. So altogether, tens of millions of dollars. Dr. Starry Lee, Chairman, I work at an accounting firm subject to the AFRC supervision. I've shared my thoughts with the chairman and everyone. These few years have been tough for the accounting profession, and then with Evergrande, major changes have happened. From what I've seen, auditing fees have actually fallen over the past decade, and that puts pressure on auditors and hurt their revenue. I was involved in passing the bill on setting up the AFRC. I asked for attention to both development and regulation. Other places have bodies equivalent to the AFRC. They promote both regulation and development. So my question is, for this budget, how much of it goes to promoting development? Now, I want to give the AFRC credit for giving thought to reducing expenses. The last question, long-term financial sustainability. I know you have no reserves. You need government funding. You will be hard-pressed to ask accountants to give you more levies. So what's your long-term plan? The member made a good point. The AFRC recognizes its role to promote the development of the accounting profession. That's why we held many events. We fostered interaction between stakeholders and the AFRC. We held more than 40 industry engagement sessions. We contacted more than 20,000 market stakeholders. This is to promote the accounting sector. We know there's the Sustainability Disclosure Roadmap. The AFRC is involved in the work so that we can improve the administration of this initiative. So there's more for this sector to do on this roadmap. Many accounting firms are small and medium-sized players. They're under stress because of the economy. They are struggling with operation. We have made training videos for these small and medium accounting firms. Hopefully, that will help these smaller players with their internal training. The third point from Dr. Sari Lee was about long-term sustainability. As I said, there are just 3 sources of income: market transactions, levies from listed companies. The levy is on the low side, 4.6% of the listing fees. The third revenue source, licensing fees from auditors of listed companies. We are talking to the FSTB about how to boost revenue. We follow the user pays principle. We want to be able to stand on our own feet. That means reaching this self-financing status. We have to extend the meeting for another 15 minutes. Mr. Edmund Wong. Chairman, I declare that I am a practicing accountant subject to the supervision of the AFRC. I'm also a member of the advisory board of the AFRC. Just then we've heard about this balance between regulation and development. We have heard much about regulation. On development, we have seen some changes. As the chairman of the AFRC said, there are 7-minute videos for training. And those videos work well for smaller players. That's good. I want to raise some concerns raised from the accounting sector. May 11th, 2022, there was an oral question. It was a strategic agreement about GBA accountants. And then the 2nd of November, 2022, another written question about accounting sector talent. And then in 2024, there was a question about unlicensed auditors. There were written and oral questions. I know the government is working on the supply of accountants. We want to grow the pie for the accounting sector so that accountants see greater room for development. So my question is, so what will the AFRC do in terms of resources to help the sector? I have a concern about unlicensed auditors. Some people pose as accountants and then they do auditing. There are some illegal practices involved. I know the police force enforces the law, but this kind of enforcement is highly technical in nature. And our laws do not allow in-depth investigation from the AFRC. So are there plans for the AFRC to expand its powers to combat criminals?
2 questions, Chairman. Thank you. I defer the question to the Chief Executive Officer. In terms of fake accountants, in November or December last year, we have updated our website to educate the public about the issue of fake accountants and the plight. Now, we don't have any enforcement power, or we can't penalize these fake accountants, but we have redirected the visitors to a website where we have listed out accountants with genuine licenses. Although we can't penalize the wrongdoers, we will conduct a wider publication effort to make the public aware of the issue. What about the GBA? 2 months ago, I had a sit-down with the GBA counterparts. We are working out the details as of now. So I hope the AFRC will continue to follow up on the issue. Allow me, Chairman. The AFRC and the HKICPA are working closely together. The HKICPA has been liaising with the counterparts in the GBA for more collaborative opportunities to help develop our accounting sector. Just very briefly, Chairman, I thank Dr. David Sun's support for the development of the trade. So please work even more closely with the HKICPA. I'm the chairman of the GBA committee under the HKICPA, so let's work closely together to link up the trades on both sides. Ms. Carmen Khan, thank you. On the $600 million injection from the government, it will only last until the second quarter of year 2026 and 27. Now, according to the AFRC, it will seek to raise the licensing fee to make up for the shortfall. Now, there are 3 new fee items. Based on the daily turnover estimation, the FRC is a 0.0020015%, while the SFC is 0.0027%. So in terms of PIE accountants, licensing fee and also the registration fee of PIEs, the fee is just $250. It is minimal. So the auditing fee collected by the sector has been decreasing, and the fee charged by the AFRC would also decrease. Now, in terms of the stablecoin bill, stablecoin issuer needs to engage a third-party independent auditor to audit its assets. So I wonder if the AFRC has the expertise to audit the accounts of virtual or stablecoin issuers and issue certificates. Chief Executive Officer, thank you. Concerning our long-term revenue stream, we have adopted some cost-saving measures. Now, by the end of 2026, the reserve level will be $156 million. So there is still room to enhance the cost-saving measures adopted by the AFRC. Following the users pay principle, we will look for ways to increase income while controlling the expenditure. As mentioned by Dr. Sun, it is already the second year where the establishment has been frozen at 145. So the FSTB will work with the AFRC to consolidate its financial structure along the users pay principle. Stablecoin issuers and regulation. Ms. Jenny Lai. We have adopted AI to enhance our work efficiency. So the existing manpower, the manpower free up, would be redeployed to other works. The regulatory landscape is changing. Auditing and vetting of virtual assets is a new thing. We need to retrain our employees to handle those tasks, so they will not be handling the existing task like before. Finally, it's my turn. I would like to put forward my views and hear replies from the AFRC. Now, I declare interest. I'm engaged in securities trading and stock trading businesses. Now, there are several kinds of fees besides the ones charged by SFC. The HAEX and the AFRC also charge fees. There's also the stamp duty on stock transaction. Now, in terms of competitiveness, if another market only charge one fee item for the same amount of transaction, it would weaken our competitiveness. Members are also concerned about the long-term financial sustainability of the AFRC. Considering the fiscal deficits of the government, we are worried whether the AFRC can pay for its own expenditure without asking for money from the government, without burdening the trade. I know this is a very delicate balance. Like I said, if there are not a fee on stock transfer or other transactions in other markets, it doesn't matter whether you lower or increase the fee. We are just outcompeted. So how are you going to balance all these factors? Dr. Sun? Thank you. Like I said, we would employ technologies to streamline our workflow so as to save cost. There is a department under the AFRC which studies the dynamics of the auditors market. There's another department which conduct checks on PIE auditors. So these two departments can achieve synergies to make our response even more rapid. Currently, we are looking at streamlining the workflows to cut costs. In terms of revenue stream creation, we need to work out a plan with the FSTB. Like the chairman said, if we increase the fee level, it would be a burden on a lot of players. So in the next few months, we will work closely with the government to formulate a plan and then consult the trade. Thank you. I thank the administration and the AFRC for attending our meeting today. That concludes this item. Thank you. Item 6, any other business, any AOB? There being none, the meeting is adjourned. Thank you.